A very good morning from Khandwala Securities Limited and welcome to Monday's trading action at Dalal Street dated May 30th, 2022.
Well, before we start, a reminder Wall Street will be closed on Monday, May 30th for Memorial Day. Meanwhile, in Friday's trade, the Dow Jones Industrial Average was up 1.8% at 33,213. The S&P 500 was up 2.5% at 4,158, and the Nasdaq Composite had gained 3.3% to 12,131. In the week gone by, the Dow rose 6.2% to snap its 8-week losing streak. Now, after Nifty's Friday smart recovery, constructive and structured advancement backed by bargain hunting, short covering, and value buying, the obvious question on every investor's mind will be, have we finally hit the bottom? Well, the positive takeaway from Friday's trade is that the benchmark Nifty ended on strong footing and most importantly has room to run further. All conditions are ripe for a value rally. Agreed, the said relief rally unlikely to last long, but at the moment the Gyan mantra is to make hay while the sun shines. Our call of the day says FOMO shall rule traders' mindset in today's trade as well, and helping sentiments are reports of a not that aggressive Federal Reserve. Well, if this fairy tale is believed to be true, then Nifty could reclaim its psychological 17,000 mark with an inter-month perspective time frame. We suspect Auto Index and Bank Nifty are likely to be star performer followed by IT Index. On buy side, our chart of the day recommends stocks like Mindtree, M&M, Tata Motors and Infi. Now before we get into details, there is the preferred trade on Nifty and Bank Nifty. Nifty closing price 16,352, buy at current market price, strict stop at 15,921, target 16,427 and then at 17,657, aggressive targets at 17,257 zone. Bank Nifty closing price 35,613, buy at current market price, strict stop at 34,321, targets 35,893 and then at 36,561, aggressive targets at 38,759. Meanwhile, the risk of recession is front and center in financial markets. The other biggest headwind which stock markets across the globe face are inflation. Well, the inflation genie needs to be put back into the bottle for the bulls to survive and prosper. In Friday's trade, WTI oil traded about $115 a barrel and closed the week over 4% higher amidst ongoing supply tightness. The prospect of an European Union embargo on Russia oil actually kept upward pressure on crude oil prices. WTI crude futures are now approaching a 14-year high of almost $126 hit in March. Technically speaking, bears may turn bulls if Nifty closes above its biggest hurdles at 16,657. The FIS scam continued to be the biggest negative catalyst for Dalal Street. FIs have sold shares worth Rs 53,791 crores in the month of May and most importantly have pulled out to the tune of Rs 2,21,000 crores from Indian markets in first 5 months of 2022. The Nifty Options data for June series suggests Nifty is likely to be in a trading range of 15,000 to 16,500 zone. Maximum call open interest is at 17,000 followed by 17,500 strike price. So 17,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 15,500 levels followed by 16,000 levels. Call writing was seen at 16,300 and then at 17,000 strike price, while there was meaningful put writing at 16,300 and then at 15,100 strike price.
That's all we have for now. For any queries, do contact us at 022 4076 7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.